Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES continued to balance within yesterday's range, and overall the volumes remain relatively light. Heading into the open, we have pre-market support at 2109 to 2111. Holding above that area tells us that the buy side is still in control, and continued balance above 2111, which is a high volume node, can result in a retest of 14 quarter to 16 quarter and potentially a breakout to the upside. A break below 2109 to 2111 would be an early warning sign that the control may be shifting from the buy side to the sell side, and then on the downside we're using 2106 quarter to 2107.75 as the micro bull bear zone. So that's kind of the last spot in the short run where buyers can still defend and step in. And if we break below 06 quarter to 0775, that would confirm a shift in short-term control from the buy side to the sell side, and that can result in a liquidation type move down to 2098 half to 2100 half, and potentially even down towards 2091 to 2093, depending on the level of weakness and the type of momentum and volume associated with the move. So if it's high volume and high momentum, then 98 half to 2100 half doesn't necessarily have to shut off the selling. Then we may have to go down to 91 to 93 in order to find some better buyers, and from there we can reverse back up towards 98 half to 2100 half and potentially higher, because the bigger picture would still remain bullish, but in the short run the sell side would then be in control, and that can result in balancing in a wider range. But as long as we're holding above 2109 to 2111, the buyers can maintain control, and like I said, that can result in a retest of 14 quarter to 16 quarter, and if it's happening on strong internals and upside momentum, then it can even lead to a upside breakout and a move up towards 2125 to 27. We just have to keep in mind that, again, the market is trading at all-time highs. So on the upside, above the 14 quarter, 16 quarter resistance, there is no hard resistance. So as the market moves up, in the event of an upside move, there is no hard resistance above the 16 quarter, and that can result in just continuation to fresh all-time highs. And how high the market goes will really depend on the level of momentum and volume we see in the market. So right now the markets are relatively balanced, but we are seeing a contraction in volatility, which usually leads to a directional move. We're open to a move in either direction, and we'll be using the 2109 to 2111 and the 06 quarter to 0775 area to help us establish bias. A break below 2109 to 2111, like I said, would be an early warning sign, and it can lead to downside continuation, but a break below 06 quarter to 0775 is really what would confirm that sellers are now in control, and that can lead to liquidation. So those are the main ideas on the day time frame. Let's see at this point how the market reacts at the pre-market support and the micro bull bear zone. That will set the tone for the day, and we'll take it from there.